short-term structure is strong, but immediate participation is under pressure. Welcome back to the AivelX stream for Thursday, June 4th pre-market. I'm Alex, joined by Ivy, our AI data analyst. In today's update, we'll cover the overall condition, where leadership is still holding, where weakness is spreading, what the timing windows suggest, and what would turn this from rotation into something more serious. Let's start with the immediate picture. What's happening in the very short-term structure right now?
Very short-term, or VST, structure is showing broad-based weakness. We're seeing 191 new lows against just 47 new highs, and the majority of assets, 739 out of 1,441, are in downtrends. That's a clear sign of widespread downside participation, even though only 2 VST power breakdowns suggest that momentum to the downside hasn't fully accelerated yet.
So the surface is stronger than the internals. How does the short-term structure compare?
Short-term, or ST, structure remains robust. There are 106 new highs, 0 new lows, and no breakdowns. That's decisive support for the uptrend. However, 203 ST power breakdowns signal that internal stress is building beneath the surface, even as the broader trend holds up.
That's the tension. Strong short-term support, but stress is rising underneath. Where is leadership still holding up?
Leadership is centered in semiconductors and industrials. Apple and Broadcom are among the tech names making new highs, and Caterpillar stands out in industrials. Large-cap technology is also showing strength, with Microsoft and Cisco at new highs.
And where is the downside pressure most visible?
Downside pressure is broad in the very short-term frame. We're seeing new lows in crypto assets like Bitcoin, as well as in consumer names such as Disney and eBay, and financials like Capital One. Additionally, the high ST power breakdown count includes names like Amazon and BlackRock, showing that internal stress is not limited to one sector.
So this is not confirmed damage yet, but the warning signs are visible. What are the timing windows telling us?
Both the VST and ST market timing index oscillators are balanced, VST at 53, ST at 52. In the VST window, a slight majority of assets are in downtrends, with about 20% in active bottom timing states. For ST, around 30% of assets are in early topside timing states, which means the uptrend is extended but not exhausted.
What would make this setup more concerning?
A surge in short-term new lows or breakdowns would confirm that the uptrend is breaking down. Right now, the absence of ST new lows and breakdowns means the short-term trend is still intact, but the high power breakdown count is a warning to stay alert.
And what would improve the setup?
A reversal in very short-term new lows and breakdowns would signal stabilization. Also, if the ST power breakdown count starts to fall, that would suggest internal stress is easing and support further upside.
So the main takeaway is that short-term structure is still holding, but immediate participation is weak and internal stress is rising. Anything else to add?
Today's structure is a clear contrast between strong short-term support and weaker, very short-term participation. It's a setup that calls for attention to internal signals, especially if downside momentum expands.
That wraps up today's AivelX stream. If you find these daily structure updates useful, follow AivelX on X, Stocktwits, and YouTube, and check back for our daily pre-market podcasts and weekend updates. Thanks for listening, and we'll see you in the next update.